wanted to see labour market weakness, because the Fed wanted to start cutting rates earlier, because I would have argued 2 or 3 months ago that the Fed wouldn't want to cut rates after July, because their concern would be that they would then be attacked by Donald Trump and be politicised. However, I've now changed my mind on that. I now think but as of data up till today, I think the base case is the Fed cuts rates in September after the Jackson Hole meeting. And I think the political constraint on the Fed's been removed, because the reality, even before someone tried to kill Donald Trump, the Biden health issue basically has meant that Donald Trump's in a very strong position. And all Donald Trump needs to do right now is to do something which is not naturally easy for him, and that is to stay quiet and be the unifying candidate, because so attacking the Fed would be crazy for him to do now. Right. And so basically, I think the Fed can cut rates in September based on data right now, and that's why you're seeing the US equity market, getting more risk on again.
Chris, sorry.
Go ahead, please.
Chris, if you could throw some light on the difference in the performance of the small caps versus the large caps in the US and the other way around in India.
Well, I would have to tell you, India is the only stock market I'm aware of right now where the small mid-cap sector is doing way better than big caps. Absolutely unique. And it's driven by this domestic phenomenon. This is not replicated in any other market right now. On the US stock market, the consensus view at the start of the year was that the US has achieved a soft landing and the US equity market would broaden out. The exact opposite's happened. So the US stock market's become narrower, which fundamentally is not healthy. However, it's not a speculative bubble, because I can show you a chart, and the Magnificent Seven earnings growth is just way superior to the broader market. So, yeah,
But in the last week, it's been broadening out.
Yeah.
The Dow and the S&P has been broadening
That's because the market now is getting more optimistic on a rate cut.
Rate cut, absolutely.
But obviously, if the rate cut reflects a weakening economy,
that's not good.
Yeah, so, but that's why it's broadening out. But the key point is NVIDIA performance is so far fundamentally supported by phenomenal earnings and revenue growth on the part of NVIDIA, which is obviously the star stock.
I think on a forward basis, it's still trading at, whatever, 35, 40 times, right? And
so I actually started a global equity portfolio recently, and I started at the worst possible time. I started it 2 days before the Microsoft purchase of GB Chat. Now, the irony is the most important development in world stock markets last year was nothing the Fed did. It was the Microsoft purchase of GB Chat, because that gave the biggest sector in the world's biggest stock market, the US tech sector, a new story. And I had about huge percentage, like 18% of my global portfolio in India, which is about 8. But luckily, I got positioned for the AI story during April, after I talked to someone who explained to me in simple English why NVIDIA is in this unique position.
I have two questions. One, will Fed cuts matter? I mean, they not hurt us when Fed was hiking interest rates. So will Fed, because we keep talking about, well, when will Fed cut rates? Will that matter in a significant way for markets?
Well, for emerging market asset class in general, it matters hugely, because the Fed cutting rates allows all these central banks in Asia to start cutting rates, because all the Asian central banks could cut rates, including the RBI, by the way, could cut rates for their own domestic demand reasons, because the inflation is lower than in the West, but they've been holding off because they don't want to undermine their currency. So I think for emerging markets, it matters a lot. I think it matters less for India, because India's in this amazing bull run anyway. But